Leon from Vietnam. He's the CIO of Dragon Capital, who just landed here 5 a.m. to come to the conference. And also Mr. Lionel Zinzo, and he is the former Prime Minister of the Republic of Benin, and he's now the founder and the managing partner of Southbridge Group. And Lionel has dedicated his financial services firm for Africa. Thank you all for being here. So today on the panel, we actually have a very atypical portfolio if we look at the region that these leaders represented. We do not see any big US tech company here. Usually, the capital markets title regions as developed, developing, emerging, and the frontier. So today on the stage, if the three gentlemen represent the regions that they come from, that has about a 2 billion population, but in terms of the capital market sense, represent less than 6% in global world indexes. So in the real world, these regions together are very significant, but in the capital markets definition, they do not exist. So there is a huge disconnection between what the real world is and how the capital markets look at it. And so let me begin with Mr. Zinzo. And you dedicate your career from public office to private sector for Africa. And it's a large continent with a large population, but it's not a mainstream in any of the capital markets definition. And how do you see this disconnection from your former public office perspective and reconcile it when you lead a private sector investment organization to tell the stories of Africa to the outer world, how they should look at it?
First, thank you very much for your invitation, and through me, the invitation to a part of Africa. I'm from West Africa, a country called Benin. Yes, Africa is not on the map of the professional investors. Maybe because we are something like 3% of the world GDP. But we are not 3% of the future. And we have three elements which are ignored in what is Africa today and tomorrow. One is the demographic so-called dividend, the chance given to this continent by demographics. It's not only that we are a young continent. The median age in Africa is 18-year-old. 50% of the population is below 18. India, it is 28. China, the median age is 38. Europe, the median age is 45-year-old. In Africa, it's 18, which means that we will have very soon the largest young adult population in our active labor force, which used to be the situation of China 30 years ago. It's very, very important. We will have, in active population, compared to the senior citizens or the youth, we will have the most important population of young, active age. That's quite important. We have a second asset, which is beyond the 3% of what is Africa, for an investor, which is everything which is natural-based assets. We have the solutions, and we will remain in Africa probably the very last carbon pit with the forestry, the forest in the Congo Basin, and so on. So as far as the resources for renewables, the reserves for arable land, the forestry, the hydraulic reserves, which are not tapped at all, less than 3%, we have probably key solution. So if you have the human resources and the nature-based assets taking more and more value, we should interest some people interested in future and not our past.
Young active population and the vast natural resources. And Dr. Zinzo, you mentioned we are like China 30 years ago. So I wanted to pass on to Dr. T. When the first time we met, I asked you this question. Vietnam is in recent years often on the headline of Asia supply chain movement and the young population and the very healthy, attractive growth. And Vietnam is China 20 years ago. And do you agree with that narrative? And if you don't, tell us why you do not.
Thanks, Vanessa. I think I kind of agree, but I have three things to tell you. In terms of economics, if you look at Vietnam compared to, let's say, emerging market, right? We have been, like what my colleague said, we account for 4% total global production. We have received around 350 billion US dollar in FDI. But our stock market is still relatively small. Like just you said, we are almost nothing in the capital market map globally. If you look at the stock market performance, we still around only 300 billion US dollar market cap. But that 300 billion US dollar has outperformed the emerging market for 8 out of 10 years in the last 10 years. Not to mention that in the last 23 years, China stock market doesn't do well. But Vietnam actually delivered 11 to 12% US dollar return for 23 years. That's amazing, right? In terms of geopolitics, I think we're a bit different in China 20 years ago. Right now, we are the country which received probably the highest one free trade agreement with almost everyone. We in Singapore, the only two countries have free trade agreement with Europe, for example. So that is some similarity in terms of growth, but there's similarity. There's not similar in terms of geopolitics, I believe.
That comment is already worth a lot of money for people to discover where to put your money in Asia.
Thank you, Vanessa.
But I wanted to lead that conversation to Japan. So you just mentioned for the future opportunities, it lies in how Japanese corporates can play a more important role in the global supply chain in terms of a higher end of industrial power and technology. And Japan, in terms of capital markets definition, it's categorized as a developed. It's the largest developed economy in Asia. Politically, we could argue Japan is categorized in the Western camp, but economically, it's very intimately intertwined with the Asia neighbors. So when you look at company analysis, find the next champions, how do you reconcile this complexity of Japanese corporates?
Yeah, thank you for that question. Yeah, that is true. That is true. And especially in Japan, like in terms of like a trading partner, like a number one country is China, not US. That is actually after 2002, almost more than 20 years. So like from that perspective, like when we analyze, like, cooperation, of course, like a relation between like China and like Japan is extremely important.
Economically.
That's right.
What about the integration with the rest of Japan? Because now that the global growth is tilting towards the global east, the Southeast Asia, large populated countries, and also the global south, like in Africa. So what is the role that you see Japanese companies play in these thematics? I know in your portfolio there are a lot of industrial names.
Yeah, but the Japanese company may be like a good at like a B2B area rather than B2C area, like a business to business, like rather than business to consumer. So from that perspective, like, region, of course, is important, but more like, company by company, like a connection is like really important when we see the.
You see very strong tie, micro level, company to company.
Right, right.
So, Mr. Zingzo, you mentioned Africa growth, that it has young population to support industrialization and also vast resources. But Africa is not one continent, it's many countries. Do you see the notion of investing in Africa stand? And I'm going to ask Dr. T the same question. Do you think the notion of investing in Southeast Asia stand, or you think this regional notion is a false concept of false diversification, but actually have buried a lot of risk underneath the carpet? And what is your opinion on that?
So essentially, your question is, have you one Africa or several Africas?
Africa.
And is that a weakness? Yes, it is a weakness. Because in terms of perception of what is Africa, people have not a well-integrated view. For instance, for me, there is nothing closer by Africa than India. But the perception is absolutely not the same. In India, you have exactly the same number of citizens, 1.4 billion. You have exactly the same income per capita. Then you have exactly the same GDP. But a young writer from Cameroon has written a few years ago a book called How Africa Has Gone to This Point. Comment l'Afrique, in French it is, comment l'Afrique en est arrivée là, which meant how does Africa go so low and miserable? Now you take the same title and you write India. How does India is going to this level? And for everybody it will mean how India becomes more and more of power. You take exactly the same sentence. You replace India by Africa. What happened to Africa to be so miserable? The two economies have the same dynamics. They have the same size, with the same population. But we are fragmented in 55 countries. So the perception is totally different. And when we have a coup d'etat, for instance, then a second, then in 3 years, 5 coups d'etat. Guinea, Mali, Burkina, Niger, Gabon. And in Mali and Burkina, 2 coups d'etat for each country. Everybody will think that this part of Africa is the majority of Africa. Any crisis in Africa will be perceived as African. But you know something? The 5 countries where you had in the Francophone Africa coup d'etat in the last 3 years. Macroeconomically, the GDP of the 5 countries are equal to 2 months of the GDP of Nigeria. 2 months. Combined, their GDP is lower than the Kenyan one. Yet, 5 countries, 7 coup d'etat. Everybody will think Africa has become unstable. You see something? We are perceived by the weaknesses of each of the 55 countries. So that is a weakness. What is very important is that the free trade zone will be implemented, the African continental, and quite fast. And in a sense, our informal trade flows in Africa are already very integrated. And all our champion corporations go beyond their national domestic borders. Today, you have more and more African companies, plus the multinational, the foreign multinationals, reasoning as a large regional market without borders. If you are Coca-Cola, and I was a board member of Coca-Cola Beverages of Africa, I mean, for Coca-Cola, there are no borders in Africa. Same for Procter & Gamble. But what is new and newer is the fact that the African champions are the ones who are going beyond their borders, and we have a large crowd of them. That is completely new, this more international, domestic Africa. Yeah. But it's not perceived by the Europeans and many of the US investors, which have a perception of risk of Africa. When we, African,
we see opportunities.
We see the opportunities. So we have to work on de-risking the perception. And the governments are working on that. And the private sector, African private sector, works now essentially on how to de-risk the perception.
Thank you for mentioning that the conventional perception or even conventional wisdom might not be wise for the future investing lenses anymore. So to Dr. T, what are the conventional perception of the developed world looking at the developing Asia to think about Asia is, growth, young, active, dynamic, beautiful, and loving places to be. But what are the wrong perception about a portfolio in Asia and the opportunities and risks from your local perspective?
I think there's a big mistake looking at emerging market as one. 10 years ago, if you want to raise $1 billion fund, could be extremely difficult for you to go for single country focus. You got to go to regional fund. But you look at the performance for the last 10 years, and for all emerging markets, it's roughly about 3 to 4% return only in US dollar.
Yes.
And my bet is it could not be different for the next 10 years. Because you look at the economic cycle, political system, it's so different among emerging markets. So it's not the same. So if you pick a fund manager, invest your money in emerging markets as a whole, my guess for the next 10 years will not better than 5%. That's why right now the fashion is you have to go to a country-focused fund. You pick the country, go through a cycle, and invest on that. So that's my suggestion in investment in regional market or emerging market.
So let me just follow on a little bit to both Tasaki-san and Dr. Tuan. You both run a investment scheme in a country-focused manner. And I challenge you as a country manager, how do you battle your home bias?
I think the home bias is obvious. I'm managing money for 95% in Vietnam. Of course, I'm biased. That definitely I'm biased. But the decision is not mine to invest in my country. The decision is my client to give me the money to
Investors
invest.
to make the
Right? So they need to look at the country. I'm saying is when you look at Vietnam, Indonesia, India, the Philippines, the Thailand, then you have to look at the economic cycle, the geopolitical positioning, and then put your money into that. So yes, I'm biased.
Sasaki-san.
Sure. Yeah, of course, like we have, everyone has some home biases, right? But especially like Japanese, like, in terms of like Japanese, like a stock investment, like I think like almost more than 30%, like a shareholder is like international. And our client also, we have like many international client. So, and the Japanese companies, like our activity is like, across, like, all over the world. So then, like, I don't think we have like, I don't think we have like a lot of home biases, like in terms of like investment.
I was asking this question to lead to the closing question to go through the entire panel, which is, as an indigenous investment professional with a global purview, what is the message you wanted to leave this international audience here about your home country that you think they should see or understand, but the outer world has yet seen or understood?
Okay, thank you. My most important message today is finally, like a Japanese economy will be normalized. Like maybe like a Japanese like economy likely enter the healthy cycle of sustained wage growth and price hike. And also like a Japanese company like is expected to like do like increase like corporate value more seriously than before. So then like overall, like many more investment opportunity in Japan than before. Thank you.
Mr. Zinzo?
You know something? I'm a French citizen and a Benin citizen. My message is, how is it that the Europeans have lost the understanding of Africa? So it's a problem for me because I'm a European and I am an African. I'm a hybrid. and it's so sad to have that statement. So please come back to a serious knowledge of what is Africa in terms of risk and opportunities. What is fascinating is China has taken all the increment of the growth of trades, of imports of Africa in the last 20 years. China has taken the whole increment. India, for the eastern part of Africa, has also taken a large part of the incremental growth. And in Europe, who has gone more and more involved in Africa? Poland, Romania, Spain, not France, UK, Germany, no, Belgium, no. So how is it that we have more and more interest, and we are very satisfied, from the Gulf countries, from Vietnam, for instance,
Yes.
investing
So
from Asia, from Brazil.
let's
And why is Europe absent? I think it's not in favor of Europe. It's not that much a pain for Africa.
let's pass on to the Dr. T about Asia.
I think my only observation is the perception of risk is a bit odd in my view. An example for you is the country I know the best, of course, Vietnam, right? in the last 23 years, Vietnam index delivered the performance better than any indexes of the US market. Better than gold, better than almost every asset class you can think of, except crypto. However, risk perception for Vietnam is high. So my only suggestion is open mind about risk perception.
Thank you all. So find hidden jewels from Japan, Africa, and Vietnam. And I guarantee you next edition of Super Bridge will have India.